Hey Currency Wizard community, welcome back to our channel. I hope you caught our last video on 5 assets to invest in right now, because today we got a continuation for you. If you're ready to explore 5 more assets that can boost your portfolio, you're in the right place. Dividend and growth stocks. We've made it abundantly evident that taking chances when you're in your 20s and 30s is acceptable, because you still have time to recover even if you lose your money at this point. Thus, making an investment in stocks is a great way to invest a portion of your funds in a high-risk, high-reward project. Simply put, growth stocks are those that are anticipated to grow at rates noticeably faster than the industry average. Compared to their peers, these stocks provide more stable positive cash flows and revenues. Conversely, dividend stocks typically represent mature, financially sound companies, meaning that their share prices are less erratic than those of growth stocks. From an early age, you should have dividend stocks in your portfolio. If companies continue to perform well, they offer chances to earn a consistent income over an extended period of time. Number 2. Exchange Traded Funds. Let's now examine ETFs, which are very comparable to index funds we previously discussed. ETFs are similar to index funds in that they are collections of securities with a variety of assets, such as stocks, bonds, and gold. Similar to stocks, they can be bought and sold on an exchange by investors. Their adaptability makes them useful instruments for making investments in broad markets that indices such as the S&P 500 or in sectors like health and technology, as well as their respective subsectors like robotics and social media. Global X Robotics and Artificial Intelligence ETF, iShares Global Clean Energy ETF are a couple of ETF examples. In the field of economics, a commodity is any economic good with a complete or significant fungibility, typically a resource. That is, regardless of who produced them, the market views examples of the good as equal or almost so. One can invest in this in a number of ways. Buying different quantities of tangible raw commodities, like a bullion made of precious metals, is the first step. Additionally, investors may use exchange-traded products or future contracts to make investments, referred to as ETPs, that follow a particular commodity index directly. They are very erratic and intricate investments, and they are typically only advised for well-heeled investors. Mutual funds that make investments in companies involved in commodities are an additional means of getting exposure to commodities. For instance, stocks issued by businesses engaged in the exploration, refining, distribution, and storage of energy would be owned by an oil and gas fund. Commodity investing offers several benefits, including portfolio diversification, potential returns, and potential inflation protection. Furthermore, commodities have demonstrated that they exhibit the strongest performance during periods of inflation, making them among the best assets to possess. An annuity is an agreement between you and an insurance provider wherein the provider agrees to pay you on a regular basis, either immediately or at a later date. An annuity can be purchased with a single payment or a series of installments known as premiums. An annuity contract may offer a retirement savings option. Your savings could be used by someone else to generate a retirement income stream. Others continue to do both. If you utilize an annuity as a means of saving money, and the insurance provider pushes back your payout, you have a deferred annuity. Conversely, you have an immediate annuity if you use the annuity to establish a source of retirement income, and your payments begin immediately. Annuities come in 2 primary varieties, fixed and variable. Another hybrid is the indexed annuity, which is also known as a fixed index annuity or an equity indexed annuity. It's important to understand annuities because they are a product that many investors take into account when making retirement plans. Additionally, they are frequently promoted as tax-deferred savings options. Annuities do, however, come with a number of costs and fees, including surrender fees, mortality and expense risk fees, and administrative fees. Commissions on annuities can also be very high, up to 7% or more. Before getting to our number 5 pick, here are some honorable mentions. Renewable energy stocks. With the world shifting towards sustainability, investing in companies leading the green revolution is a smart move. Keep an eye on those driving innovation in solar, wind, and other renewable resources. These stocks not only align with a brighter future, but also have potential for substantial returns. E-commerce giants. It's no secret that online shopping is on the rise. Investing in established e-commerce companies, especially those with a global presence, can be a steady and lucrative investment. Keep an eye on market leaders and emerging players that are disrupting the industry. Taking our number 5 place, initial coin offerings and cryptocurrencies. Only recently have traditional Main Street investors begun to show interest in cryptocurrencies and initial coin offerings, ICOs. Nevertheless, these quickly evolving markets are alluring to investors with billions of dollars raised in initial coin offerings, and over 1,000 distinct cryptocurrencies currently in circulation. The majority of individual investors also find it challenging to understand these intricate investment products and assess their risk profiles. However, we are aware of their extraordinary high returns. The potential returns could be as high as 200% or as low as 12%. A few initial coin offerings have done exceptionally well. The OTA, for example, had a 3,000-fold return on investment. In other words, you would have made $13,000 if you invested $1 at the time it was offered. Alrighty, those are 5 more assets to invest in right now. And thanks for watching as always.